Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, we are looking at two different companies that I own in my portfolio that we haven't actually spoken about lately, and I have been buying them. So I want to do a very short video just to kind of summarize why I like their business and why I have been adding, and I'm going to show you the financials inshallah. If you haven't joined us on the Patreon yet, please do so. And if you do, then make sure you join us on the Discord. And looking at today's market, it just looks like everything is back to normal. Everything is green today. Adobe is doing really well today. It's up about almost 6% because the earnings report was really good. I haven't looked at it in details, but it looks like they have been beating both top line, bottom line, and at the same time, the guidelines was actually quite good. So it'll be interesting to see a bit basically what happens to the company going forward, because now the sentiment is slightly changed. But I still own the basically this, and I think I'm down about 16% or whatever it is because of what's happening in the market in the last couple of days. Right, sorry about my voice. I think I'm coming down with something. So I just want to get this quickly done. So let's have a look at the two companies that I'm talking about. The first one is Qualcomm. Qualcomm has been in my portfolio for a very long time. This company basically deals with mobile phone technologies as well as the 4G, 5G. They have loads of patents. Is one of the best companies in the semis. I really like the business model. They basically, the CEO is really nice guy. He genuinely, like, when he speaks, it makes sense what he's talking about. And the fact that this company is in a lot of industries, including the Internet of Things and so on, and the way the world is going right now, where we're trying to basically, technology is changing how we do things, especially with the AI and everything else. Internet of Things is actually one of the businesses. They're trying to basically diversify away from mobile phones and working with Apple. So currently trading $119 per share. It has basically the year to date is actually up just about 8%, which is not bad. So it has recovered from 2022, since 2022. And the 5-year return for this company is 105%, which is quite nice. So if you had this company in your portfolio in the last 5 years, that's what you would have seen, massive growth, which is really good. EPS about just above $10, and it has 132 billion market cap, almost 133 billion market, which is quite nice. It has a narrow economic moat, but I think this company deserves a wide economic moat because they have a patent that other companies actually pay them royalties to even use it and so on. The beta is just above 1, which means basically a little bit volatile, and I've seen this. By the way, this is one of the companies that are very cyclical. So when the economy is booming, technology is booming, obviously these companies do well. When the economy is doom and gloom, just like maybe like this year and so on, these companies do not do well. So overall, it's very cyclical. So 2 years, 3 years, they're down and then they come back up again. So semis are very volatile. So you have to be careful with that. PE is very, very low. Forward PE is even lower. And the 5-year average is 20. So it has 5-year average of 20, and right now we're looking at about 11 and 10. So that, to me, that means it's very, very cheap. And even looking price to free cash flow here is about just 16, which is good. And the sector, we're looking at about 28%. So relative to the sector, it seems real. 28 is quite high. So in comparison to 10, almost double, right? More than double. So in terms of dividends, we're looking at about 2.6, which is one of the reasons I actually like this company. Latest increase was almost a 7%, the 5-year growth rate of 5%, and they pay you about $3 for every share that you own. They already went on the ex-dividend dividend growth streak of 19 years. So in another 6 years, they will become dividend aristocrat. I'm sure they will get there. Payout ratio very, very low. That's really good. Dividend safety of 80%, and they have $8 billion in the bank. And in terms of free cash flow, yield, we're looking at 5.3 for free cash flow, which is really good. So when you look at this side of things, it's absolutely brilliant. When you look at the valuation, it looks really good. Okay, and profit margin is really good. Operating margins, return on equity, total return in the last 10 years, we're looking at about 7.66%. Return on invested capital, 41%. Okay, revenue in the growth, compounded annual growth of the last 5 years, we're looking at about 14%. And then current ratio, we're just looking above above two, which is really good. So normally we're looking for anything above 1. In terms of what is this doing here? In terms of the valuations and what we're looking at, basically estimates for next year is about 10%. Okay, and then the next year, the year after, we're looking at 8. Basically, the next 5 years after that, basically we're looking at about 8%, which is really good considering basically what's happening in the market right now. Current price of $119. Fair value is, according to Simply Wall Street, 137. That's 15% undervalued. According to Morningstar, it's actually 17% discounted. So they're saying 140. So more or less the same, these two companies. Again, same thing for basically Tip Rank, 25% upside, 146. And then Seeking Alpha also agrees, and 34%, almost 35% upside, 157. Look at this. In terms of Sharia compliance side of things, absolutely no issues, and they have been buying back their shares. So really, really genuinely great company. And just to quickly look at their revenue, okay, this is one of the reasons why a lot of people basically were selling this stock, because it looks like it's going to come down a bit in terms of revenue, and then it's going to bounce back again. That's cyclicality. If you think about, if you look at maybe this from the last 10 years, you will see, or even 15 years, you will see how cyclical these companies are. In terms of if we take out this, you can see EPS has been massively grown, which is really, really good to see. So that's the first company. The second company we're looking at today is J&J, another company that I own in my portfolio. Again, we haven't spoken about this company. They are doing a spin-off soon. So there's another company called Kenvue that basically they're spinning off, I think around November of this year. That's basically when they are doing this. And it will be interesting to see what happens to the company after that. I haven't actually looked into the details of whether we're going to get shares of that company. Whatever it is, I'm sure we will, but will be interesting to see it. But this is a very well-known company. If you ever go to, for example, if you want to buy a wash mouth or whatever, mouthwash, Listerine, for example, Aveeno, Clean, all of that, Clear, they sell all of these products, and they are very well known household products. As well as that, they have the devices, the medical devices they sell, the pharmaceutical company. They sell everything, and that's why they're doing this spin-off. So it'll be interesting to find out what happens after that. But right now it's trading $153 per share. A year to date is almost done 13%. Hence why I've been buying this company. In terms of the 5-year return, we're looking at about 18%. In terms of EPS, just above 6%. Market cap $6. Market cap of $480 billion. So it's a huge company. It has a wide economic moat, and beta is very low. It will be interesting to see what happens when the spin-off happens, because I don't know if it becomes a volatile. It will be interesting. It will be interesting to see what happens. And then PE, you're looking at currently 22, almost at 23. Forward PE is actually very cheap in terms of 5-year average. The average PE for the last 5 years, we're looking at about 17. So it looks expensive in comparison to that. And relative to the sector is actually basically cheaper. Price to free cash flow here, we're looking at about 23. Again, a little bit pricey on that side. Dividend is almost basically their dividend yield is almost at 3%. Latest increase about 6.6. 5-year growth rate of 6%, and the annual payout is $4.52. They went ex-dividend on the 17th of February this year. I think they paid me, or they're about to pay me, I can't remember, a dividend growth streak of 60 years of increasing that dividend, and their payout ratio is 65%, slightly higher. Okay, I would like to basically this to come down a little bit. Dividend safety 99%, so there's no issues with basically the dividends being cut and so on. Free cash flow here, we're looking at about $17 billion, and free cash flow yield of 4.3%, which is really good. In terms of profit margin, we're looking at about 19%, operating margins of 23%, return on equity 23%, total return in the last 10 years, we're looking at about 9%, 15% in terms of return on invested capital, which is very important, and then revenue, 5-year growth rate of 6%, and current ratio is just 1, which means they have enough to pay off their current liabilities. Next year, they expected about 3%, 3.6% growth, and the next 5 years, almost about 4%. Currently trading $153 per share. Look at this, okay, 205, that's what they expect, almost a 25% undervalued at the moment, according to Simply Wall Street. And then according to Morningstar, it's actually fairly valued 164, so it's about $10 weight of difference there. According to TipRank, slightly different, 180, 17% upside, 180, almost 17%. It's a buy according to Seeking Alpha. And as you can see here, actually I haven't done this part, so let me quickly do that, add that. And as you can see, it's almost 100% when it comes to business screening according to Zoya, and then 8.8 interest-bearing debt at interest-bearing securities is just 5%. Now in terms of their shares outstanding, as you can see, they have been buying back their own shares. On top of that, paying new dividends. In terms of shareholder, this is one of the best companies out there when it comes to shareholder friendliness, and the fact that they're actually giving you back a lot of that money as a customer, as a investor. Right, let's now have a quick look in terms of their revenue growth. So if looking at this, it looks like it's actually heading the right direction. So from 94.5, let's call it $95 billion in 2022, and 2023, 97 billions, then 100 billion from there onwards. And in terms of the EPS, if we take out this, you will see it's also heading the right directions. Right, so those are the two companies I wanted to share with you guys. I do own them in my portfolio, so just to be transparent, I bought more of this company last couple of days. If you are with us in the what is it called, if you've been watching the videos in the last few days, as you can tell, I'm absolutely knackered, by the way. I'm doing this video just to make sure consistency is out there, and also share with you guys what I have been doing in the market last couple of days. Right, so I have been adding to this company. At the time, I think at the beginning, about 2 weeks ago, I think I had 27 shares. Since then, I bought about 5 shares or so. And the other one is Qualcomm here, 27 shares, 27.3 shares so far. I want to add at least a couple of more shares in before it comes back up again, because if the sentiment changes, these companies quite quickly go up about to, I don't know, 4%, 5% almost every single day. So like I said, they're very cyclical companies, especially Qualcomm. J&J is kind of okay. J&J at one point, by the way, guys, I was up almost, I think, £800 or something, and right now is only 5% or £200. Overall portfolio, as you can see here, we are actually, I think we're below where we were at the beginning of the week. There we go, 67,500, and right now just to £67,000. So yeah, just we are, and I've added, I think, £1,000 this week. In terms of where we are with the ISA, we got 1,666. So I'm going to add 500 or so every single week in the next 3 weeks until the end of basically this, until the 7th of April, inshallah. I hope you like what we're doing here. If you are enjoying the journey, if you like the community, please like the video, subscribe to the channel, ask questions, join us on the Patreon, join us on the Discord. It will be absolutely amazing to build a like-minded brothers and sisters. Have a wonderful day. Assalamu Alaikum.